Hello everyone, my name is Nihit Nahar. I secured rank 6 in CF final. That means I can add CA in front of my name and I am a LLB graduate as well. I've been in the field of taxation for last 10 years and seen taxation from last 10 years. I've had the privilege to teach 3 rank 2s. First one being Abhishek from Bangalore, second Agam from Ahmedabad, and third Kavya again from Bangalore. I basically reside in Bangalore. And that's why two of the rankers at AIR2 were from Bangalore. Now, it's not that I have been able to train them and that's why they have got rank 2, but it's completely their effort. But as I mentioned, it's always a privilege which I have enjoyed teaching them. This is a brief introduction about me. The subject which we are going to deal with is indirect taxes. Now, when we talk about indirect taxes, the first thing which we need to understand is how would we begin? Two very important things which are required from your side. One would be the textbook, which is this one, and second would be a notebook. A 200-page notebook would suffice for the purpose of indirect taxes. These are the two basic requirements to begin with indirect taxes. Now, going forward and discussing about how the paper pattern looks like, if we were to talk about indirect taxes, paper 8 spreads for 100 marks. And this 100 marks is divided into two subparts. The first one being GST and the second one being customs and FTP. ICAI has provided a brief breakup of both the subjects. GST covers 75 marks while customs covers 25 marks. But a very important thing which you must understand is the total paper always has an additional question. So the paper does not have 100 marks, but it has 116 marks in total. Now normally this 160 marks is about 30 to 35 marks here, and the balance which is about 80 to 85 marks which is under GST, because your paper would contain an additional question and hence the weightage of both GST and customs is much higher compared to 75 and 25. Normally a ratio of 75:25 is maintained, but that can change whenever institute likes. So there is some variation which goes on because the paper is not for 100 totally. With an option there are questions for 116 marks. So this is about indirect taxes. You see, most of the stuff is under GST, but we must not ignore customs and FTP, which has some practical problems which can be very good for fetching marks. Now, after this brief introduction, let me begin with a story. I have a friend whose name is Mr. A. He's from science background. He came to me one day. This is about 3.5 years from today. He came to me and said, Nitin, I want to manufacture a calculator. I told him, I'm from commerce background. I don't understand anything about manufacturing and how do you get that calculator. So I will not be able to help you on this particular aspect. And then he said me, Nitin, I don't require any consultancy as to how the calculator is to be manufactured. I only require your help whenever there is an issue with regard to taxes. Otherwise, I'll be able to manage the entire business. I said that's fine because my expertise towards taxation is a little better than my expertise on making a calculator. So I assured him that if you have any issues with regard to taxes, please give me a call and I'll help you out. Now, when you want to start a manufacturing activity, my friend started accumulating all the resources which are required for manufacturing a calculator. First, he wanted some machines, he wanted raw material, he has to arrange for labor, a premise has to be kept, and over and above all this, for purchasing all these things, money is required. So he started arranging all these things. He stays in Bangalore and his manufacturing facility would also be set up in Bangalore. Now, once he sets up the manufacturing facility, then my work begins. So he started setting up everything and then he went to a store in Bangalore to purchase some raw materials. Now, my friend Mr. A went to the store in Bangalore to purchase some raw materials. This is about 3.5 years back from today. He went there and the shopkeeper told him that he'll be charging something known as VAT. My friend gave me a call. Nitin, what is this VAT? I asked him, where are you? He said, I am in Bangalore. I then told him, whenever you purchase any goods within the state, you are required to pay something known as VAT. I again confirm, value added tax is paid on goods purchased within the state. He agreed to it, paid VAT amount, collected the goods and came back to his premise. Then he went to Mumbai to purchase some more raw materials. Now when he went to Mumbai to purchase some more raw materials, in the back of his mind, he was aware that there is a tax known as VAT. So he went to the shopkeeper there, asked for the raw materials, purchased all the raw materials, made everything ready. And then the shopkeeper asked him, where are you from? He said, I am from Bangalore. And then the shopkeeper charged something known as CST. My friend immediately gave me a call. Nitin, what is this CST? You had told me VAT is applicable on goods. But here the person is telling me to pay CST. I asked him, where are you? He said, I am in Mumbai. Then I told him, Mumbai is outside Karnataka. Now, whenever you purchase goods from outside the state, you are required to pay CST, which is Central Sales Tax. Now, he was a bit confused, so I just mentioned both the things again to him. Goods purchased within the state will be subject to VAT. Goods purchased outside the state would be subject to CST. The shopkeeper charged him CST in this particular instance. Now, when the shopkeeper charged him CST, he was again a bit reluctant because how can there be a difference from one state to another? I explained him the power to tax outside the state vests with the central government. As there were disputes which used to happen between states as to which state will tax it, the entire power was transferred to the central government, and that's how we got Central Sales Tax, which is levied on goods outside the state. He got convinced, understood one basic principle: goods purchased within the state is subject to VAT, and goods purchased from outside the state is subject to CST. Thereafter, he came back to Bangalore. When he arrived at Bangalore, he received a airline ticket bill from his travel agent for Bangalore to Mumbai and Mumbai to Bangalore. Now, in that invoice of the travel agent, he found a tax known as service tax. He again gave me a call. Nitin, what is service tax now? I asked him. Did you purchase the plane? He said, no, Nitin, I have not purchased the plane. Did you purchase the seat and brought it to your home? He said, no, Nitin, I have not brought the seat to my home. Then I said him, this was not a transaction related to goods. You have actually availed a service which is transportation of passengers from one place to another. And whenever you avail a service, in that case, you are required to pay service tax. He was a bit confused. And then I explained him, goods, VAT/CST, when it comes to services, service tax. He again asked me, Nitin, is there a difference between service purchased within the state and outside the state? I said, no, it remains same for any service which is procured within the state or outside the state. In fact, any service purchased from outside India would also be subject to the same service tax. He felt a sigh of relief that, okay, on services, I don't have a bifurcation. And thereafter, he moved forward. Now raw materials are ready. Now he wanted to purchase a machine. Now you tell me, where do you get the cheapest machine? Though you are not in front of me, but I can hear a name, China. So he also went to China and he was astonished by the prices which were there. The prices were really good. And then he gave a call from China. Nitin, there's nothing, VAT, CST, nothing is applicable. They are saying if you send it to India from here, will not charge you any tax. He was very happy that there is no taxes applicable when I am getting goods from China to India. And then I told him, whenever any goods are imported into India, there is a levy of custom duty. So any goods which are imported or there is an export of any goods would be subject to custom duty. And thereafter, we made a computation of custom duty, as custom duty has various legs in its levy. So that was computed and finally machine arrived. Raw material done, machine done, labor was ready, premise ready, and the manufacturing activity begins. And then my friend Mr. A, one fine day, gives me a call. Nitin, I have manufactured a calculator. I said, congratulations. And then he told me, it's now my time to collect taxes. I was a bit confused. How is it your time to collect taxes? And then he said me, Nitin, now when I sell the calculator within the state, I will collect VAT. Is it right? I said, yes, it's absolutely right. Then he told me, when I sell the calculator outside the state, I will charge CST. Is it right? I said, yes, absolutely right. When I service a calculator, I will charge service tax. When I send the goods or calculator outside India, I will have to be aware of custom duty. I said, absolutely right. Then he said me, Nitin, have I become an expert of indirect taxes? Then I told him, there's one more tax in your transaction. As you have manufactured a particular product, on manufacture of this particular product, there is central excise duty which you will have to collect. So then he was a bit confused, saying that even after learning so many taxes, there's another levy on manufacture, which is central excise duty. He understood central excise duty, and he was a bit reluctant about the number of taxes on goods, because any goods purchased within the state subject to VAT, any goods purchased from outside the state subject to CST, any goods import or export subject to custom duty, any goods manufactured there is a levy of central excise duty. So there were multiple taxes which he had come across. Now, in this particular segment, after some time, his business started doing really well. And when business does well and he has good amount of profits, he started traveling. Now he went for a vacation. When he went for a vacation, he came across a tax known as luxury tax, which was charged by the hotel. He again gave me a call from the vacation place. Nitin, I've come across one new tax which is known as luxury tax. Can you explain me this? I told him that vacation is a luxury for you. Government wanted revenue and they found out a new event that luxuries can also be taxed, and that's how luxury tax was introduced on hotels and stay. Thereafter, he also went to a movie. When he went for a movie, he came across a tax known as entertainment tax. From the movie hall, he is giving me a call. Nitin, what is this entertainment tax? I told him, please enjoy the movie. Something which is happening in front of you in the movie hall is entertainment, and that's the reason government found out a new event of entertainment to levy taxes, and government came up with entertainment tax. He agreed to it and went back to the movie hall. Thereafter, he expanded his business. Now, the moment he expanded his business, he came across some new taxes. Like when he started a branch in Mumbai, he came across a tax known as octroi, which was collected for entry of goods into the local area. When he started a branch in Pune, he came across a tax known as local body tax. When he started a premise in Rajasthan, or as he was in Karnataka, he was aware of something known as entry tax. So there were multiple taxes which were levied on the same goods. Like when a particular product was manufactured, central excise duty was levied. When that particular product was sold, if it was sold within the state, VAT was applicable. If it was sold outside the state, CST was applicable. When that product entered Mumbai, there was octroi applicable. Same product being sent to Pune, local body tax is applicable. Same product sent to another state, there was another entry tax which was applicable. So the issue was not multiple taxes per se. The issue was that a particular product was being levied with several taxes. And after seeing all these taxes, Mr. A decided to close his business. With so many taxes, his life was very difficult because managing all these taxes was becoming a big challenge to Mr. A, and therefore he decided to close his business. Now, to help persons like Mr. A and other persons who are in industry or who are involved in business, government has removed this structure of multiple taxes, and on 1/7/2017 they introduced a tax known as goods and service tax. You can get it from the name, goods and service tax. So it's a tax which is levied on goods as well as services. There are some goods which are even today subject to the earlier levies, which we'll be discussing at a later stage. But if we were to look at the broader picture, VAT is no more there, CST is no more there, service tax is no more there, central excise duty is no more there, luxury tax, entertainment tax, octroi, LBT, entry tax, all these have been removed to the extent where they were applicable on all goods. One tax even continues with GST, and that tax is custom duty. Let me tell you, custom duty is one of the oldest taxes known to mankind. We will discuss more about it when we enter into custom duty, but it is one of the oldest taxation known to mankind. It is much older than Income Tax Act as well. Now, when we talk about GST, which was introduced for these multiple taxes, it was considered to be a boon. Reason, multiple taxes were causing a lot of issue to businessmen. But there was one issue. The problem was these taxes, some taxes were collected by central government while some taxes were collected by state government. For instance, VAT was collected by the state government. CST, though it was levied by central government, but the collection was done by state governments. Service tax was collected by central government. Custom duty even today continues to be collected by central government. When we talk about central excise duty, obviously you guessed it right, it is collected by central government. Luxury tax, entertainment tax, octroi, LBT, these were collected by municipal corporations and state government taken together. Now, the question is whether GST is collected by both central government and state government, or is it collected only by central government? You know the answer. GST is collected by both central government as well as state government. Now, both coming together to levy a tax was something which was never imagined. Let me tell you the history behind this. Now, the power to levy any tax comes from Article 246A. Article 246 read with 7th schedule of the Constitution. Article 246 read with 7th schedule of the Constitution has 3 lists. The first one, union list. Second, state list. And the third one being concurrent list. Any matter which is specified in the union list, tax would be levied by the central government, and the law for that would be made by the central government. Any matter which is there in the state list, the tax would be levied by the respective state government. And one important point, each state government has its own authority to make the law. So can there be a difference between Karnataka and Maharashtra? Yes, there can be a difference, but it has to be within the ambit of the state list. Concurrent list, where both can make the law, but both will make the law separately. However, there is not even a single taxation item in the concurrent list. If you were to understand this, you'll have to go back to this. Now, when we talk about VAT, VAT was there in the union list. CST was there in the union list. Service tax, union list. Custom duty, union list. Central excise duty, union list. Luxury tax, state list. Entertainment tax, state list. So, VAT, luxury tax, entertainment tax, all these were there in the state list. CST, service tax, custom duty and central excise were there in the union list. Now, the problem was, how do you levy a particular tax which will be levied by both central government and state government? Sir, simple. Put it in the concurrent list. But please understand, there was an issue with regard to this. The taxes and lawmaking powers were already bifurcated between central government and state government when the constitution was framed. At that point of time, they never thought that both would come together for a tax matter. So it was not possible for them to introduce an entry in concurrent list, because there is a miscellaneous entry in union list which says any matter which is not specified in any list, union will have the power. So they had to make something which is much stronger compared to Article 246. And what did they do? They brought in Article 246A. This Article 246A starts like this. It says, notwithstanding. Very powerful word. You'll come across this at a number of places in any law. Notwithstanding anything contained in Article 246. That means Article 246 is very powerful. It says, please don't listen to anything which is said in Article 246 when you are reading me. I am much superior compared to Article 246. And then it says, both central government and state government will have the power to levy tax on intrastate supply of goods or services. Now, what's the meaning of intrastate supply? We will come across this word at a later point of time. But for your understanding at present, intrastate supply is a supply which is within the state. That is the crude meaning. What's the actual meaning? We'll get to it when we move forward. So, intrastate supply of goods or services, who will have the power? Both central government as well as state government would have the power to levy taxes with respect to intrastate supply. And it very clearly says, notwithstanding anything contained in Article 246. So it's a very strong provision. And this is how the constitutional amendment was made and GST was introduced. But what happens if there is a transaction outside the state? Let me tell you, the power to levy tax for a transaction which is outside the state vests with the central government completely. And from where does it come? It comes from Article 269A, which states that in case of interstate supplies of goods or services, the tax will be levied by central government. Here, tell me one thing. When I say tax will be levied by central government, do you think central government will alone eat the entire tax, or will they give some share to the state government? Obviously, they will give a share to the state government. They cannot eat the entire tax. Though it is levied by central government, it is to be apportioned to state governments as well. So that means one thing is very clear, even the state government gets a share when it comes to any revenue with regard to interstate supply. In crude sense, interstate supply at present would be a transaction outside the state. The actual meaning would be understood by us in some time. Now, let's try to recollect what we have said till now, and thereafter we will move forward. Let's try to sum up this entire discussion which we have had. Now, first thing, We discussed about indirect taxes. Indirect taxes, paper 800 marks. GST comprises of 75 marks, while customs and FTP 25 marks. I gave you an example of my friend Mr. A, who was worried about the number of taxes which were levied. There was VAT, there was CST, there was service tax, custom duty, central excise duty, entry tax, entertainment tax, octroi, LBT. So he was confused with regard to all these taxes, and the compliance was very difficult for him. From where do you get the power to levy these taxes? Government gets this power from Article 246, read with 7th schedule of the Constitution. Article 246, union list, state list, concurrent list. But GST was neither there in union list, nor state list, nor concurrent list. They had to make something which is much stronger than Article 246. So what did the government do? Government introduced Article 246A. 246A begins this way. Just to correct, it's not government, Parliament introduced Article 246A. Article 246A says, notwithstanding anything contained in Article 246, central government and state government both would come together and levy taxes on intrastate supply. Article 269A says, in case of an interstate supply, it would be levied by central government, but it would be apportioned to state government as well. You have come across a tax known as CGST. CGST comes from here. You have heard about a tax known as SGST. SGST comes from Article 246. You have heard about a tax called as IGST, which we'll be discussing, comes from Article 269A. Just take a minute's breather. Let these things sink in, and then we write something in our textbook. Now, we came across Article 246A, 269A, we came across multiplicity of taxes. Now, let's write something. I need you to get back to your textbook. I am on page 3. I've kept this so that you can see that this is page 3. Page 3, it begins with Introduction to GST. And the first point in that says multiplicity of taxes, and you can see some space there. Now, all these space will be used by us writing certain information, and we are going to complete the book. Along with completion of the book, we will also target to complete our GST so that GST enters in our brains. Now, Introduction to GST, multiplicity of taxes. Just below this, A. Prior to 1/7/2017, there were multiple indirect taxes levied in India. Within bracket, value added tax. Please avoid using any short form. I will write short form, but you please write the full form. Value added tax, comma, central sales tax, comma, service tax, comma, luxury tax, comma, entertainment tax, comma, central excise duty, etc. Full stop. Now move to point number B. Now in B, you'll mention with effect from 1/7/2017, GST is applicable on supply of goods or services, full stop. It is charged / levied by both central government and state government. Now within bracket you can write dual GST. This concept of both central government and state government coming together and levying a tax where both get a share would fall under the ambit of dual GST. As you are aware, India is a federal structure. As India is a federal structure, taxes is applicable and central government and state government are separate, so they collect their own taxes. Even today, after GST is introduced, central government collects its taxes separately, state government collects its taxes separately. Though we pay both the taxes together, but it goes to each state government separately. Now post this, let's discuss certain small points. Now, the first point below this says GST is charged by the central government as well as respective state government / union territory on goods and services. GST is a value added tax which is levied on manufacture, sale, consumption of goods and services. Why do we call GST as a value added tax? After some time, we are going to discuss some illustrations regarding this, and when we come across those illustrations, we will deliberate more upon why GST is called as value added tax. There's a continuous chain of credit. Even the next point relates to the same aspect, which will be learned by us in an illustration. Continuous chain of credit meaning throughout the supply chain, like manufacturer selling it to the wholesaler, wholesaler selling it to the retailer, retailer selling it to the customer. Each person can take input tax credit of the taxes which is paid on purchase. For example, if the manufacturer has incurred taxes of 10 rupees on his purchases, and while he sells it, he charges 12 rupees as tax. In that case, the 10 rupees which he paid on purchase will be allowed to him as input tax credit, meaning a specific exclusion from the 12 rupees which he is collected and he is required to pay. This will come across when we discuss illustrations with regard to this. There's a continuous chain of credits where at each leg, the person who is involved in that leg can take the credit of taxes which he has paid on his purchases and use it to set off his liability on his sales. Now, so this 1 and 2, these 2 points we will discuss as we move forward. Let's keep these 2 points aside. We need to also understand one very critical aspect about taxation, which is levy of tax. Levy, charging of tax. The power comes from the constitution and there are 3 lists: union, state, concurrent, which we have already discussed. This is mentioned here. I want you to just read point number 3, point number 4 and point number 5. 3, 4, 5. Just have a look at it and see if you have understood it. Pause the video here, have a look at it, and thereafter again listen to the video. Now, You have read about Article 246A and 269A. Article 246A deals with intra-state supply where central government and state government both charge GST. Article 269A interstate supply where central government will be charging GST but it will be apportioned. The most important word here is apportioned as provided by parliament, meaning central government will not alone eat entire taxes. Some portion of the taxes will go to the state government, and it is always 50-50. Central government keeps 50% of the taxes and balance 50% is transferred to the respective state. How does it work? How does it function? We will come across this in some time. Now, another important thing, let's come back to this particular aspect. We were here. Article 246A, Article 269A. Can there be a fight between two friends? I am hearing an answer, yes. If they don't fight, then they are not friends. Obviously, there can be a fight between two friends. Can there be a fight between two enemies? For sure, there can be a fight between two enemies. So, two friends can have a fight, two enemies can have a fight. Now, my question to you is, can state government and central government have a fight? The obvious answer to this is yes. At least those in Karnataka will understand the Kaveri issue which goes on between Karnataka and Tamil Nadu, which is never ending, and we keep fighting. So in that case, one thing is very clear, that states or central government can have a fight. Now my question to you is, where will they fight? Don't worry, Parliament has provided a space for fighting in the constitution with respect to GST, and that fighting place is known as GST Council. This GST Council, a very powerful body, Article 279A deals with GST Council. GST Council is a combination of central government and all state governments taken together. GST Council is a body which makes recommendations regarding GST. First, tell me one thing. Recommendation, optional, mandatory? I can hear optional. But let me tell you, as and when you read the GST law, you will understand that GST Council is a very powerful body. When I say very powerful body, at most of the places in the law, it's written that a particular decision or law cannot be made until and unless it is recommended by the GST Council. That means there are certain provisions which can come into effect by central government and state government only when it is recommended by the GST Council. So if they don't recommend, that means you cannot take that particular decision. That's the importance of GST Council. GST Council is one of the strongest body in indirect taxes at present. Now, when we talk about the structure of GST Council, obviously both central government and state government have come together to levy a tax. Now, when we say both have come together, there can be fights. Where will that fight happen? Those fights will happen at the GST Council. GST Council is a structure which contains representatives from the central government as well as state government. Central government is represented by Union Finance Minister Nirmala Sitharaman at present. She is also the chairperson of the GST Council. Whoever is the Union Finance Minister, that person is the chairperson of the GST Council. All state governments are represented by state finance ministers. Now my question to you is, how many finance ministers will be there when it comes to state governments? Biggest question today in India is how many states are there in India? And that too, I am talking only from the purpose of GST, from the angle of GST. Now, state government entirely, let me tell you, in this there are 31 finance minister. Confused, right? 31 states, we have never heard that there are 31 states, sir. But if I were to tell you, there are 31 finance ministers. So totally, there's one union finance minister, 31 finance ministers, and there is a minister of state who is from the union government. So union government has union finance minister and minister of state for revenue, and central government 31 finance ministers. Let's try to understand how did we get this 31 finance ministers. Now we'll begin from the beginning. We had 29 states and 7 union territories. I'll obviously not list down all the names of 29 states, but let's list down the name of union territories. Can you tell me what are the union territories which are there in India? I'm getting some answers. Delhi, Pondicherry, Lakshadweep, Andaman and Nicobar, Daman and Diu, Dadra and Nagar Haveli, and you need to tell me which one is missing. So we have Delhi, Pondicherry, Lakshadweep, Andaman and Nicobar, Daman and Diu, Dadra and Nagar Haveli. There is one particular union territory which I have not included in this. You'll have to tell me, you'll have to think and tell me, I'll tell you in some time. Now, when we talk about this, Jammu and Kashmir was here. Now what has happened? Jammu and Kashmir is now divided into Jammu and Kashmir Union Territory and Ladakh Union Territory. So at present, if you see, there are 28 states totally. Jammu and Kashmir is a union territory. Ladakh is a union territory. Delhi, Pondicherry, Lakshadweep, Andaman and Nicobar, Dadra and Nagar Haveli, and Daman and Diu. The status of these have also changed to certain extent. What is the change which has happened? The change which has happened is these two have been merged. And did you get the name of the last one? Yes, I can hear you all. It's Chandigarh. So 1, 2, 3, 4, 5, 6, 7. These two are merged, but we have also added 2. Still taking everything together, 31 is not coming, sir. Now, I have a question. Who is the Chief Minister of Lakshadweep? Sir, there is no Chief Minister. Okay. Are you saying me Union Territories don't have any Chief Minister? Okay. Let me ask you, who is the Chief Minister of Delhi? Sir Arvind Kejriwal. That means obviously there are Chief Ministers which are there. Now when I say there is a Chief Minister in Delhi, does Pondicherry have a Chief Minister? Yes, V. Narayan Swamy. Now, the first two, that is Delhi and Pondicherry, These two are known as union territories with legislature. That means though central government has powers in these union territories, but they also have their independent powers which is available to them. So Delhi and Pondicherry are union territories with legislature. When Jammu and Kashmir and Ladakh were made, Jammu and Kashmir is a union territory with legislature, and Ladakh and all other union territories are union territories without legislature. When I say these are union territories without legislature, obviously there is no elections which is held. It is completely into the control of central government. Administered by central government completely. President is the head for these union territories. So union territories with legislature, union territories without legislature. Let's arrive at that 31 number. Now how did we get 31 finance ministers? This 31 finance ministers is 28 states plus Delhi, which has a finance minister, Pondicherry, and last one being Jammu and Kashmir. Because these three are union territories with legislature. Remember one thing very clearly from today, for the purpose of GST, there are not 28 states, but there are 31 states. Don't forget this till the end of indirect taxation paper 8 examination. Totally there are 31 states in India for the purpose of GST. 28 states, Delhi, Pondicherry and Jammu and Kashmir. All other union territories will be regarded as UT. So if you were to total everything, what's the total of everything? We have 28 states and one has got merged here, so 7 minus 1 plus 2. 7 minus 1 plus 2. So all this taken together comes to 8. Out of this 8, 3 are union territories with legislature and 5 are union territories without legislature. Now let's try to understand 3 with legislature and 5 without legislature. 3 with legislature, Delhi, Pondicherry, Jammu and Kashmir. 5 without legislature, which are those? Andaman and Nicobar, Lakshadweep, Dadra and Nagar Haveli, Daman and Diu, Chandigarh and Ladakh. These 5 are union territories without legislature. It seems to be a geography class, but please understand one thing. It's very important to know this at the beginning so that we don't make errors at a later stage, because in a 15-mark problem or a 16-mark problem, at the beginning it would start with any of these informations which you can see here, and we'll be completely confused with regard to which is the state, which is the tax, what is to be levied. So you need to be very strong with some basics on this particular aspect. To sum up, 31 finance ministers, 28 states plus Delhi, Pondicherry, Jammu and Kashmir, because these 3 are union territories with legislature. There are 5 other union territories which are without legislature. What is levied in these 5 union territories? We'll discuss at some point of time. Those 5 union territories are Lakshadweep, Andaman and Nicobar, Daman and Diu and Dadra and Nagar Haveli, Chandigarh, and finally Ladakh. These are the 5 union territories. Now, for November 20 exams, this is not applicable. The amendment of Jammu and Kashmir is not applicable. But as this recording is being made for May 21 exams and November 21 exams, the structure which I have just showed you will be applicable as these amendments have been made effective. However, if the institute in its study guidelines says that these two amendments will not apply to May 21, then we need to ignore it. There'll be an update on this from institute, and whenever there is an update, we'll keep you posted with regard to this. Now, coming to the main aspect of GST Council. Now, when we talk about GST Council, we have understood that GST Council is a body which makes recommendations regarding GST. Now, when we talk about GST Council making recommendation with regard to GST, my simple question to you is, can all states come together and pass a decision in the GST Council? And central government is left with nothing. So, state governments are ruling the show with regard to GST. Do you think this will be possible? To understand this, we need to understand what is the power which is available to central government and what is the power which is available to state government. The power which is given to the central government is 1/3. So central government alone has 1/3 power. If I were to put it in a percentage, 33.33% power belongs to the central government. And when I move to the state government, all state governments taken together have 2/3 power. There is no distinction between a smaller state, larger state, Goa chota, a very small state, or Karnataka being a very large state. There is no distinction. All states are taken on par. Otherwise, UP will eat the entire share. So that, to keep that in mind, 1/3 belongs to central government as the power, and 2/3 belongs to state government. The fun arises when I tell you the required majority to make a recommendation. People, please be very careful. Whenever we talk about GST Council will not make the law. Law is made by the parliament and state legislature. As per the constitution, law cannot be made by the GST Council. GST Council is only a recommendatory body. But as we understand, GST Council's recommendations are much stronger, because without their recommendations, a decision cannot be taken. So that's the power of GST Council. Now, required majority to give a recommendation. Required majority to give a recommendation is 75%. Now, when I say 75%, you please understand, people, when I say 75%, can all states taken together meet this required majority? Never. Without the support of the central government, there cannot be any decision which is passed. And then we come to the required quorum. I am sure you understand what's the meaning of quorum. Minimum attendance required for a meeting to be held valid. That minimum attendance required for a meeting to be held valid is 50%. So at least 50% of the members should be present. Only then a GST Council meeting is said to be a valid meeting. Plus, if there is a dispute, in that case voting would happen, and the voting majority, required majority, would be 75%. Till now, there hasn't been even a single voting instance in GST Council. One of the primary reasons behind this is most of the states today are ruled by the NDA, and that's why they'll be easily be able to meet that 75%, and hence voting has not happened. All the decisions have been taken unanimously with regard to GST Council. So, to sum up, GST Council, recommendatory body, central government and state government come together in a GST Council. Central government represented by Union Finance Minister and Minister for State of Revenue, and state governments represented by 31 FM. People, please, what is FM? Finance ministers. Don't write short forms. It becomes very difficult to understand these short forms before the examination, because The challenge for you is 8 subjects. The challenge for me is 1 subject. It's easier for me to understand this FM because I am dealing only with 1 subject. But for you, it is difficult as you are dealing with multiple subjects. When you come across this FM in different subjects, your understanding of FM will change as you move from subject to subject. So please write full forms, avoid short forms in any subject, including indirect taxes. Now, what I want you to do is, I want you to write this particular part. Just this particular part. You can see this amoeba. I want you to write this particular part at a particular place. This will go in page 2 of your textbook, where there is a space available. You'll just pause the video and write this entire structure. This particular portion not required. This entire amoeba part you can write, and this 7 union territories part we will take it up in some time where we mention all these, but I would just want you to write this. And with this, what I want you to do, this will come here on page 2. This will come here, and thereafter you can read about Article 279A GST Council. So this is the part which you are going to write. Take a minute's breather. We again connect in a while. Article 279A, which provides for GST Council, it is empowered to make recommendations to the central government and state government with regard to GST. It is headed by the Union Finance Minister. Now, let's try to understand what are the legislatures under GST. When we talk about legislations, it's very important to know the laws which are applicable with regard to GST. Before we enter into the subject, these are the basic informations which we need to have. Now, when we talk about legislature, the first act is Central Goods. You can begin writing with me. Central Goods and Service Tax Act 2017. Within bracket, CGST Act. It totally contains 174 sections. This is increased because at present, if you see the numbering, it's from 1 to 174, but with any law, there are always amendments, there are always additions. So when we say there are always amendments and additions, it keeps on increasing. Like there's section 43A which has been added between 43 and 44, 101A, B, C between 101 and 102. So this keeps on happening. This 174 is not going to be a constant. This will keep changing. But if you see the section numbers, it's from 1 to 174. In between, there will always be additions which are made. Then B, State Goods and Service Tax Act 2017. Within bracket, you can write SGST Act. This will also contain 174 sections. It is a replica of CGST Act. Plus, can you tell me how many SGST Acts are there in India? There will be totally 31 SGST Acts. Sir, how can it be 31? We have only 29 states. 29 states. Jammu and Kashmir was removed, but Jammu and Kashmir was added as a union territory with legislature. So that 29 remains same. Plus 2 more, Delhi and Pondicherry, which will have their SGST laws. So each state has it. Now my question to you is, which SGST Act will you read? Karnataka, Gujarat, Maharashtra. You'll not read any of these. You are going to read most of the CGST provisions, as SGST is just a replica. Then C, Union Territory GST Act 2017, within bracket UTGST Act. How many Union Territory GST Acts are there? Sir, it should be Lakshadweep, Andaman and Nicobar, then there should be Chandigarh, then there should be Daman and Diu and Dadra and Nagar Haveli, and one for Ladakh. Absolutely wrong. There's only one UTGST, because all these UTGSTs without legislature are controlled by the central government, and hence there is only one UTGST Act. Again, it's similar to CGST Act. And last one is integrated. We'll come to the meaning of integrated. Integrated GST Act 2017, within bracket IGST Act. Totally contains 25 sections, deals with complete transactions of interstate supply. So entire ambit of interstate supply is covered by this particular aspect. Now before we move forward, now the most important principle of indirect taxes, which we are going to understand now, is indirect taxes are consumption based taxes. Now when we say indirect taxes are consumption based taxes, we need to understand this in principle. And please remember one thing, the entire indirect taxes is just based on this one principle, that indirect taxes are consumption based taxes. If you are able to understand enough, I am able to connect with you on consumption based principle, we'll be done with indirect taxes. Now, when we talk about indirect taxes being consumption based taxes, we need to understand that whenever a particular product or service is consumed in India, then taxes will be levied. But whenever these are consumed outside India, then taxes will not be levied. For example, say suppose I am sending a good particular product from India to US. Now when I am sending the particular product from India to US, where is the consumption? Export. Where is the consumption? The product would be consumed in US. As the product is getting consumed in US, taxes will not be charged in India, because indirect taxes are consumption based taxes. Now in this case, tax will be charged by US, because most of the countries in the world follow consumption based principle when it comes to indirect taxes, and that's one of the most important aspects of indirect tax. Now let's take a reverse scenario. Say suppose I am importing goods from China. When I am importing goods from China to India, where is the consumption? The consumption is in India. The moment I say the consumption is in India, obviously taxes would be levied. So entire ambit of indirect taxes rests on consumption based principle, also known as destination based tax. But for this, we also need to understand that what's the scope of India. Now India is not just the landmass. I'll not draw the entire picture because I'm horrible at drawing, but please imagine the above portion of India as well. This is the southern portion of India. Now when we talk about India, we need to be very clear about one aspect. This is the landmass. Is landmass part of India? Obviously, yes, this landmass will be considered as part of India. Now, what else is included? Is India only this much? No, India also includes Andaman and Nicobar, Lakshadweep. I know that people, but it goes beyond Andaman and Nicobar and Lakshadweep, and that's territorial waters. This waters which is there here will also be said to be part of India. Now, up to 12 nautical miles is Indian territorial waters, also known as territorial waters of India. Both mean the same. Now, up to 12 nautical miles is Indian territorial waters. 12 nautical miles is approximately 22 kilometers. When we measure on road, we measure it based on kilometers. When we measure in sea or ocean, we normally measure in nautical miles. So 12 nautical miles, approximately 22 kilometers is India. So from here, that is the land mass. From the land mass, 12 nautical miles will be considered to be Indian territorial waters. Does India end here? No, it does not end here. It stretches up to 200 nautical miles. This entire area is called as exclusive economic zone. People, exclusive economic zone. The name has the meaning. Exclusive economic zone. India has exclusive power to carry out any economic activity in this area. India has exclusive powers to carry out any economic activity in this area. That's how the definition is for exclusive economic zone. Now, what's the difference between Indian territorial waters and exclusive economic zone? Indian territorial waters, India has all the powers, not just economic power. But exclusive economic zone, India has only economic power exclusively in that particular zone. For instance, if a vessel from US, if a ship from US enters this area, can India question? No, because this is exclusive economic zone. But if the vessel enters here within 12 nautical miles, can India question? Obviously, yes. The vessel cannot enter India, that is Indian territorial waters, without its permission. But exclusive economic zone, it can enter, but it cannot carry out any economic activity. The power to carry out any economic activity is with India, and that power to carry out any economic activity is exclusively with India. Now, beneath the waters, you have seabed, where all minerals are there. Extraction of minerals takes place. Two major players, Reliance Industries and ONGC. All minerals are extracted from this particular area, this seabed. This area till here is known as continental shelf of India, which again is up to 200 nautical miles. So India is landmass, Indian territorial waters, exclusive economic zone only to the extent of notified economic zone where extraction is carried out. Fourth, continental shelf of India, again to the extent of notification in a maritime act where extraction is taking place. And last one is airspace above territorial waters and landmass. Airspace above territorial waters and landmass. So these 5 things taken together cover the ambit of India. That means any goods or service consumed in this particular area will be subject to indirect taxes. Say suppose a machine is imported in land mass. Will taxes be applicable? Yes. Say suppose a machine is imported in territorial waters. Will taxes be applicable? Yes. If it is imported for a designated area where extraction is taking place, whether taxes will be applicable? Yes. Even in continental shelf, the same principle applies, and airspace above territorial waters and land mass. So, this is the ambit of consumption based taxes. Now, you can just make a small note of this in your notebook. We will come across the definition of India, and there I'll make you write this particular aspect. This is optional, not mandatory, but I'll make you write a particular line on consumption based principle. This particular thing is optional. You can pause the video and copy it if you need be, otherwise you can anyways revisit it. So what's important is consumption based principle. I'll make you write a line on consumption based principle. On page 3 here, if you have some space, then you can just add a note here. Indirect taxes are consumption based taxes, and please never forget this. But trust me, in some time I would see that you have forgotten this. Let me see if you are able to recall this principle of consumption. Now, moving forward, we move to discussion on some important terms. I am on page 4. We'll be discussing some important terms, and we'll also be deliberating upon some basic provisions before entering into the GST law. We are now to move towards the essence of indirect taxes. We have always said that indirect tax is consumption based tax. It's now to understand what's the meaning of consumption. The meaning of consumption is given in the topic, which is place of supply. Place of supply helps us to understand where the goods or services are consumed, and based on this, tax is determined. Now, before we start with place of supply on page 37, I want you to sit back, relax, and watch. The entire consumption principle is in the control of central government, because all the provisions which we are now going to discuss come from the IGST Act. IGST Act has all the sections relevant to place of consumption, also known as place of supply. There are 7, 8, 9, 10, 11, 12, 13, 14. These sections which are the base of consumption based principle. Section 14 is a special provision with regard to online information database access retrieval services, but the most important thing is all these sections comes from the IGST Act. Our role would be to understand all these sections. Section 7 of IGST Act talks about interstate supply. Section 8 talks about intrastate supply. It defines what is the meaning of intrastate supply. Section 9 talks about transactions which happen in the territorial waters. Section 10, 11, 12, 13, these 4 provisions provide the place of supply. Now, 12, 13 deal with services, 10, 11 deal with goods. In that, what is the bifurcation? 10 deals with goods, domestic transactions, while 11 deals with goods, international transactions. Services domestic is covered by section 12, while services international transaction is covered by section 13. And finally, there are some special provisions related to OIDAR, Online Information Database Access Retrieval Services. Here is where we will understand much more about import of service for personal consumption. This will help us to understand OIDAR and import of service better. Now, how do you remember it? The first confusion occurs between section 7 and section 8. Section 7 deals with inter while section 8 deals with intra. What are we reading? We are reading the IGST Act. IGST Act will give preference to inter or intra. Obviously, the answer is inter, and that's why section 7 deals with interstate supply while section 8 deals with intrastate supply. 9 talks about territorial waters. What would be the place of supply in case the transaction is in territorial waters? How do you remember 10, 11, 12, 13? Tell me one thing, in the Goods and Service Tax Act, first goods comes or service comes? Sir, goods is there before services. First you will regard domestic transactions or international transactions? Sir, we will regard domestic transactions first. That's how the flow is. 10 deals with goods domestic, 11 goods international, 12 services domestic, and finally 13 services international. Now whenever we say services domestic, we are saying that the supplier and recipient is in India. Be very careful. The supplier and the recipient is in India. When we talk about section 13, supplier or the recipient is outside India. Now what does this mean? We are very clear with one thing. If both are in India, then it is covered under section 12. Supplier as well as recipient. If one of them or both are outside India, then it would be a transaction covered under section 13. Supplier is outside, section 13. Recipient is outside, section 13. Both are outside, again it would be covered under section 13. Now, let's try to understand the meaning of interstate supply and intrastate supply. Interstate supply, it says when the location of supplier and place of supply is in two different states. When the location of the supplier and place of supply is in two different states, two different union territories, then it would be regarded as an interstate supply. Karnataka, Maharashtra. What two things do we consider? Very important. Location of supplier, place of supply. See the distinction, people. When we talk about domestic and international transaction, what are we comparing? Supplier and recipient. Supplier and recipient. But when we are identifying whether it is interstate supply or intrastate supply, what are the two things which we are comparing? Location of supplier and place of supply. From where will you get this place of supply? You will get this place of supply from these four provisions. These four provisions help to determine place of supply. So place of supply comes from section 12, 11, 10, 12 and 13, while location of supplier would be identifiable. But how do you identify which out of this will you apply? For that you will have to check where is the supplier, where is the recipient. As we discuss more and more example, you will be very clear on this. Now, it also says that three other transactions will always be considered as interstate supply. That means 7 is much powerful compared to 8. 8, when we talk about intrastate supply, it says location of supplier and place of supply. If these two are in the same state or union territory, then it would be considered as a intrastate supply. Location of supplier and place of supply in the same state. But there are three exceptions. These three exceptions will always be regarded as interstate supply. Now, our task will be to identify these three transactions which will always be regarded as an interstate supply. The first transaction which will always be regarded as an interstate supply is any supply which is in the category of export. Any export transaction will always be considered as a interstate supply. When we say export, what do we mean? We mean location of supplier is in India and place of supply is outside India. If the location of supplier is in India and the place of supply is outside India, that will always be regarded as a interstate supply. Reason? We have discussed this. Bangalore to US, export regarded as IGST. But sir, I have a doubt here. Export is not liable to GST. In that case, why are we required to define whether it is interstate or intrastate? People, as you move forward, you will understand that exporters get refund of GST which they have paid on their purchases. To claim that refund, there is a mechanism where they can pay tax on output and claim that as a refund. But then the question would arise, what kind of tax will they pay? They will always be subject to IGST. So any export transaction will always be regarded as a transaction with IGST. The second one is any supply to or by an SEZ unit or developer. Now the question is, what do you mean by SEZ, Special Economic Zone? This was full form, but what do you mean by Special Economic Zone? The name has the meaning. It's a special economic zone where an economic activity to the extent of export would be allowed to be carried out with various benefits, and these benefits can be of labor laws relaxation and taxation relaxation as well. So they get various benefits so that they can export the goods and services. 2005 SEZ Act was framed and benefit of export was given. What happens is, if there is a backward area and government wants to develop it, they give or notify that particular area as a SEZ. This encourages companies to set up their premise in that place so that they can get some benefits. The government gets the infrastructure on that place developed because new industries coming up, there would be more employment opportunities in that area, and the industry gets various benefits on taxation front and labor laws front. Are you very clear with this? And the third transaction is any transaction which is not intrastate supply, which is not an intrastate supply. Now when we say which is not an intrastate supply, you will have to think and give me an example. When we read, I will make you write the example there. But now think, what can be a transaction which is not an intrastate supply? Any such transaction which is not an intrastate supply will be regarded as a interstate supply. Just give me 2 minutes more. Listen to me very carefully. 1. IGST Act provides for place of supply. The entire ambit of place of supply is given in the IGST Act. Section 7 deals with the definition of interstate supply. Location of supplier, place of supply in 2 different states, 2 different union territory, 1 state, 1 union territory is covered under the definition of interstate supply. 3 transactions will always be regarded as interstate supply even if it is within the state. 1. Export transaction, obviously it's outside India, so it will be regarded as an interstate supply. Second, any supply to or by. Be very careful about the word to or by. It can be a supply to an SEZ, it can be a supply by an SEZ. Both will be regarded as a interstate supply. So if I have a SEZ branch in Karnataka, and if I have a non-SEZ branch in Karnataka, and if there is a supply between these two, will it be regarded as a intrastate supply or interstate supply? Interstate supply, because any transaction to or by an SEZ will always be regarded as a interstate supply. And the third one is any transaction which is not an intrastate supply, even that would be regarded as a interstate supply. What's the meaning of intra? Section 8. What's the meaning of intra? Location of supplier, place of supply is within the same state or union territory, then it is called as intra-state supply. Territorial waters, what happens in case it is near the territorial waters? We will discuss this with section 9. Then we have 10, 11, 12, 13. 14 is a separate discussion which we will mix it with a provision of OIDAR. So 10 goods domestic transactions, 11 goods international transactions, services domestic are covered under section 12 and services international are covered under section 13. Be very careful about 2 distinctions. 1. When you do a comparison between inter and intra, it is location of supplier and place of supply. When you have to choose between 12 and 13 which help you to determine place of supply, you check supplier and recipient. If both are in India, 12. If both or one of them is outside India, then it would be covered by section 13. Sir, why are we studying all this? CGST plus SGST in case of intrastate supply, and if it is a interstate supply, then it would be IGST. Plus, this will help us to determine where is the consumption, which state should get the revenue. So, again, it's something very important when we look from the angle of consumption. So, what I want you to do is, I want you to read on page number 37 relevant provisions. Have a look at relevant provisions. Go through section 8 and section 7. Go through section 8 and section 7. Then we will take up section 9. Pause the video and go through it. I hope you have understood this. Section 7, 8, 9 territorial waters, 10 place of supply goods. Be very careful about this particular part. Supplier and recipient are in India. One of them or both of them are outside India. Then we move to section 8. Location of supplier, place of supply is in the same state, intrastate supply. If it is in different, then it is called as interstate. The following are always treated to be interstate supply, where the supplier is located in India and place of supply is outside India. Within bracket you can write export. To or by, circle the word to, circle the word by. In the taxable territory, not being a intrastate supply, you will write example import of service. Understand, import of service from Delhi, from US, the service is consumed in Delhi. Import of service, in such cases, it's not an intrastate supply, but the consumption is in the taxable territory. It would be regarded as an interstate supply. That's why whenever there is a import of service, IGST is applicable. Now, the next discussion is with regard to section 9, which deals with supplies in territorial waters. Now, when we say supplies in territorial waters, you need to understand this small example. This is the southern region of India. Now, here a ship has stopped due to technical glitch. There is a issue with the ship, and now the ship is stranded near Kerala. Now, in such cases, from Bangalore, an engineer goes to this place and repairs the ship. So, the service is repair of ship. Tell me one thing, where is the service consumed? The service is consumed in territorial waters. Do you agree that the service is consumed in territorial waters? Now the service is consumed in territorial waters. Who will get the tax when the service is consumed in territorial waters? Let's see. Location of supplier. You always want two things. What two things? Location of supplier and place of supply. If you have got location of supplier and place of supply, you can determine what would be the type of tax applicable. Location of supplier is Karnataka. Place of supply, what should I write? Territorial waters. Now when I say territorial waters, the question arises, what would be the tax and who will get the share out of it? What the government has said is, if it is in the territorial waters, then it would be considered to the nearest state to that particular waters. So what is the nearest state to this water? It is Kerala. So place of supply will be considered as Kerala. So never place of supply can be in waters. Whenever it is in waters, go to the nearest state and keep that in such state. This will lead to territorial disputes where, say suppose a ship is stranded and the service is provided at a place which is equidistant from Gujarat and Maharashtra. If something is equidistant from Gujarat and Maharashtra, the issue would be which state should get the revenue. Should it be Gujarat or Maharashtra? There will be a dispute at a later stage. But will the question for our exams always clearly mention which is closer? Obviously, it will mention which is closer, and that particular state will be regarded as the place of supply. It is also possible that sometimes the supplier is in waters, like an activity near Goa. Certain activities going on near Goa, this is the place and this is where the activity is going on. So the supplier location will be considered as Goa. So instead of water, it will be considered to the nearest state. So neither location of supplier nor place of supply can be in waters. Whenever it is within waters, what you will do is you will bring it to the nearest state. Let's now see section 9. Now section 9, notwithstanding anything contained in the act, where the location of the supplier is in territorial waters. So supplier is in territorial waters, or the place of supply is in territorial waters. Then the place of supply shall be deemed to be the coastal state or union territory nearest point, where the nearest point of appropriate baseline is located. You'll be very clear with this when you read this example. Repair service which is done by a company in Delhi, which is done near the waters of Kochi, then the place of supply will be Kochi in Kerala. Pause the video, read the example. Now, I hope you have read the example, and now you can see on page 38 there are a set of examples which are given here. It says determine the place of supply, the tax to be charged, and the section of the following transactions. I'll show you one sample, and thereafter I would want you to pause the video, write the answers for all, and then check it while I discuss the various alternatives. First, see, the first one is dealing with goods. Supplier is in Karnataka, place of supply is in Karnataka. Tell me one thing, supplier is in Karnataka, place of supply is also in Karnataka. What section will you use? First, whether it is inter, intra. Now I'll just keep for your reference, 7 is inter, 8 is intra, then you have 10, 11, 12, 13. Goods domestic, goods international, services domestic, services international. So the first one will be section 8. Why? Because it is a intrastate supply. Read with section 10 because it's a domestic transaction. And what would be the type of tax? CGST plus SGST. CGST plus SGST. Now, if you see the next one, services Karnataka, Karnataka. At this point of time, I want you to pause the video and solve all these cases. Once you solve it, you can again play it. Now, I hope you have written the answers for all. Let's see the answers. Services Karnataka, Karnataka. So section 8 read with section, both are in India. We will treat it as section 12 CGST plus SGST. Why is it section 8? Because it is a intrastate supply. Why have we taken section 12? Because it is services domestic transaction. We are assuming that the place of supply and location of recipient is same in these cases. Okay. Next, goods Karnataka, Maharashtra. Karnataka, Maharashtra. IGST, right? So section 7. Now that will be read with goods domestic transaction, that is 10. And what will you charge? IGST. Next one, 7 read with 12 IGST. Now goods Karnataka to US. Goods Karnataka to US. All transactions outside will always be interstate supply. So it would be 7 read with 11 IGST. Services Karnataka to US, obviously we will not charge tax, we will give the benefit of export, but we'll have to mention that the export benefit, it is regarded as a interstate supply. So this will be section 7 read with 1 is outside India, so this will be 13 and it will be IGST. Why 13? 13 services international transaction, 1 is outside India. Then goods US to Karnataka. Again 7, red with 11. IGST 11 because goods international transaction. Then US to Karnataka services, this will again be 7, red with 13. IGST. Then we have goods Karnataka SEZ, Karnataka non-SEZ. Tell me, Karnataka SEZ supplying a product to Karnataka non-SEZ. First, it will be section 7, red with, it's a domestic transaction, so it will be section 10 and it will be IGST. With SEZ, na, you can write IGST, sir, between two SEZ, IGST. So all this will be 7, 7, 7, 7, 7. This will also be 7, this will also be 7. Now red with services both are in India, 12. Goods 10. Services both are in India, 12. Goods domestic transaction 10. Both are in India, section 12. Goods both are in India, 10. 12. What I want you to do is, I want you to go through this entire thing. You need to be very strong with this before we move forward.